I'm going to be brief in my keynote remarks because to have the opportunity to talk to the Asian Financial Society, I must tell you I've come to hear from you just as much as I've come to speak to you. This community has been an incredible source of leadership across Wall Street for, I think you said 30 years now. 35 years. And I have to tell you, many of the most cutting edge insights about the global marketplace have come from this group. And so I would be a fool to come here and pretend to only talk to you. Instead, I've come to hear from you about what issues you see on the horizon, particularly in the cyber and fintech spaces, and some of the issues that you've been discussing today. So with your permission, I'm going to do a very, very brief series of high-level remarks, and then I figured we could just have a conversation. How's that sound? Yeah. Excellent, good. So thank you again for that very kind set of remarks. You know, my my family supported me throughout my education. And my father is, I should just tell you, he's a staunch Republican. And I mentioned to him, hey Dad, you know, whenever I get introduced, people tend to mention all the degrees that I got. And he says, yeah, do me a favor, when they say that, tell them that's what happens when you subsidize something. So I was very, very fortunate to have a family that provided all that support. And I've been very fortunate throughout my career to have a lot of different mentors, counselors, advisors who have helped me navigate the job I'm in now, which is really the most challenging task that I faced. And I want to talk in particular about the challenges of being an SEC commissioner at this moment in history, and why, how I came to understand a little better why it's so hard for the SEC to stay at the cutting edge of new regulatory and market developments. And I want to make a request to all of you to help us stay attuned to those developments. And here's what I'll say. The SEC, by its nature, is a deliberative, careful, thoughtful body. It is a building. Anybody ever visited the SEC building in Washington? Oh, good. Okay. So recently? Well, yeah. So one of the things I like to remind people about the SEC, I should give you just to give you a sense of my background. It's true. I was an investment banker at Bear Stearns. I went to business school before I went to law school. So I was an investment banker and a management consultant before I was a lawyer. And the SEC, you should know, is a building arranged, designed, and built by lawyers. Here's what that means in a practical sense. We're here at the wonderful Lowenstein Sandler law firm. I walk in and look at the layout, and I notice that the partners are among the associates who are among all the other folks who are working on client matters. That's the way it was when I was an investment banker. My CEO at Bear at the time was a man named Ace Greenberg, and he very intentionally sat on the trading floor near where we all sat and wanted to know, you know, you go get a coffee, bump into somebody, you find out what they were working on. And get a sense for what's happening in the marketplace. Very valuable for the leaders of an organization to be on the ground. Now, those of you who visit us at the SEC, you notice where I sit? On the top floor. Because we lawyers are in charge and want you to know it. I'll tell you what's challenging for me is, from a management point of view, is that a guy like me wants to know what everyone's working on. But the staff who...
That's why you come here, right?
That's what I mean. And the staff that are doing that work sit on the floors below us. And they don't come up to the 10th floor that often, because nothing good happens to them when they do. So I'll tell you the truth, one of my experiences sort of at the SEC has been, I'm the guy who'll get off the 10th floor, come down to, you know, I'll go down to Corp Fair, you know, and you can immediately see that the staff are not accustomed to this. They immediately start talking to them, oh shit, are we in trouble? What's this guy doing that? There are many challenges to working in a building like this, but there are benefits too. The SEC is deliberative, careful, thoughtful. The rulemaking process is by design, by law, careful and cumbersome. First we must make a proposal, then we must take account of market feedback, then we must make adjustments to any final rule based on that feedback. Then we must almost certainly face and withstand litigation over the choices that we made. And defend the rule in that context. And of course, we make all those choices I described a moment ago, keeping very much in mind that litigation will soon arrive, and wondering about what we can do to best protect the rule. Everything I'm describing to you, you know already, but I say it to you tonight because I want you to realize that it is also a limit of what the SEC can do institutionally to stay abreast of fast-changing markets. You see, I've had many folks come to me since I took office at the SEC and say, Commissioner Jackson, you should adopt a rule regarding ICOs, regarding crypto. And I say to them, every time I see them, what would that rule look like today? And they describe it. And I say, okay, in the very best case, I can get from start to finish on that rule in 14, 15 months. Can you assure me that in 14 months this will be the right rule? Can you assure me that in 14 weeks it will be the right rule? And the answer is no. That means that from time to time, the SEC does its best work, not through the cumbersome and formal rulemaking process, but instead by talking to the marketplace. It's a dirty word in Washington right now, but we do this thing that I, as a practicing lawyer, when I was at Wachtell-Lipton for some time, always valued very much, which was the ability to get guidance from the staff about what their expectations are and why. That process enables us to talk to the market, hear from solid practitioners who are developing the most cutting-edge solutions to business problems, and give them feedback about the questions that might arise under the securities laws as a consequence of those choices. I think that so far, it is fair to say our efforts in the cryptocurrency space, in the ICO space, in the most cutting-edge challenges we face, have been by going this route. A case-by-case, careful determination through communications with industry about what we're comfortable with and where we would have questions. And I actually think it has so far been one of the finest moments under my terrific chairman, Jake Layton, because we have taken a measured, balanced, careful approach that reflects what we do well, which is to talk to the market about what's happening. I don't yet have the sense that the market is in a position where we could pursue a cumbersome rulemaking and be confident that we would be making a rule that would make long-run sense for the market in many of the areas you've talked about today. That doesn't mean I'm closed-minded about it at all. I'm not a guy, you might know from my rep, who's shy about making rules when I think one is necessary. But I want to be a realist about what we can deliver at the SEC, given the legal limits and the institutional limits that we face. And what we cannot do, and I think must not do, is develop rules on these cutting-edge subjects that we've been discussing all day today that would not make sense for the marketplace that will exist when we finish them, which I assure you will be sometime down the road. So with that background in mind, just wanted to share a little bit with you about what's on my mind when I think about how to handle these various spaces. I'd love to hear from you about the problems you see, about where we could provide better guidance to the market, and about what we can do to encourage the kind of innovation you've been talking about today. So please, what's on your mind?
And we'd like to give at least like 15 to 20 minutes around this as well too, so this is the exact time to be able to speak to the commissioner about this, so thank you.
I'm willing to start.
Please.
I wonder what your Republican dad would think about your view of guidance. So I guess my question to you will be, are you worried that guidance has gone too far over the line and is used as a threat rather than as a request for information from the marketplace?
Great question. For those of you who didn't hear, just to repeat it, he wonders what my Republican dad would think of guidance. Or to say it another way, what you wonder, sir, your name?
Ray.
Ray. What Ray's wondering is guidance really still helpful on the margin to entities who are asking for it, or does it come across more as a threat? Say a little more about ways in which it could be viewed as a threat.
Well, you have an advantage of not actually having to legislate either administratively or through a congressional act. So you have embedded in guidance the ability to actually ignore what the law says and to simply say to the marketplace, look, this is the way we think it's going to be, and if you don't like it, you don't really have any recourse. You can't sue us for guidance. You can't complain to your congressman. You can't give public comment on a rule. In fact, you can't even tell anybody that we had this conversation.
So a few things about that. First, some of my colleagues on the commission have expressed real questions about the use of guidance, and indeed, I think the White House has recently worried about the use of guidance. I think, like any action of a government institution, there can be abuses of the kind you're describing, and I would worry about those. But I would also worry about the cases where the market needs guidance, and we haven't provided it. And I would say that the SEC has a really good history of filling in those gaps for the market at moments when they need it. That was my experience as a practicing lawyer. And I understand those of my colleagues who would say, as you pointed out quite correctly, there's risk to making law without the Administrative Procedure Act, without the democratic controls of the Congress. My own view, just as a footnote, would be that even though I know exactly what you mean, when I would call and get guidance, I would take it pretty seriously. On the other hand, it's not actually the law, it's just guidance. But I understand. Very few of my clients, and I suspect, sir, very few of yours, are interested in being cross the views that have been given by the SEC. So we need to be careful about that. But I would also say that we need to be careful about failing to provide guidance at crucial moments. That was my experience in practice. You might have had a different one. One of the hard things about the SEC is we often worry much more about taking an affirmative action than we do about not acting, even though, in my humble view, having started with business rather than law, they're the same. Let me give you an example of what I mean. You ever play blackjack with someone who doesn't like to hit on 16? You ever had this experience, man? So, anybody here, no one here plays blackjack? Yeah, I was going to say, it's a funny experience being in my job. You ask people if they gamble, and it's almost like you're the high priest of not gambling, so they're like, you know, you can tell me, man. Like, if this thing's like 2 hours, okay, all right. So, I'm not a big gambler myself, but I like the social part of the game. You sit around having a drink, talking to friends. Look, one of the funny things about blackjack as a game, everyone knows how blackjack works. You play to 21, the dealer shows you 1 card but not 2. Okay. Everybody knows there's math of this. Like, PhDs at MIT have figured out that if the dealer shows a 10 and you have 16, what should you do? You should hit. Hit that 16, right? But I have watched many people refuse to do it, even though the proof that it is in their interest is indisputable. And the reason is they have a strong sense they don't want to be the hand of their own destruction. They don't want to touch the table, instruct that they get another card, and have the money taken away. They would rather a higher probability that the money be taken away if they don't have to be the hand of their own destruction. And the casino knows this. That's why they arrange the game this way. They can just make it automatic. Everyone knows the numbers. But no, they force you to decide because they know how hard it is for someone to take action that could hurt them. I worry that sometimes at the SEC, we are like a blackjack player who want to hit on 16. We're afraid to take an affirmative action because that can be more easily criticized than doing nothing. And I would just say that when it comes to guidance, failing to fill a gap that the market doesn't understand can be as risky as filling one. Now, with all that said, you are right that there have been instances where guidance has gone much too far and where we need to rein it in. And I think actually over the last little while, some of my colleagues, by making that point publicly, have really made clear that we need to strike that balance properly. And I agree with them.
Wasn't there a letter from the SEC advising people to be cautious of the guidance from trading in markets? That it's not authorized by permission?
Yeah, so there was a recent debate about this. We put out, so this is a good example actually. We put out what I thought our staff did an exceptional job. Guidance to the stock exchanges about how we plan to look at applications to change fees. And you know, there are folks who view that guidance as really too hard to meet or too easy to meet. There's all kinds of debates about it, but I thought it was good for our staff to say, here's what's on our mind. Some of the exchanges have taken the view, I think quite aggressively, that this document doesn't change the law. And I think our chairman has done a really, really good job. He came out with a statement where he said, you're absolutely right. This doesn't change the law. The law, as you point out, is the law. What it tells you is, what's on our mind is we think about applying the law in a really complicated situation, which is the situation of exchange fees for certain products and how competitively they are set. The economics of that are very complex. The staff is saying, here's one way we're looking at it. But Chairman Jay Clayton, and again, he's really an extraordinary leader, he came right out and said, if you want to go about this a different way, we're obviously going to look at any submission you want to give us. We're just trying to give you a sense of arguments that might be ones you could make. Look, as a guy who practiced, I found it really helpful to know what was on the staff's mind. I didn't tell my clients that, you know, if you don't do it this way, you're going to go to SEC jail. I still haven't seen the SEC jail. But what I would say is, this is a helpful way to give you a sense about what's on these guys' minds. And yes, they are the guys who enforce the law. So I want to be really clear. I think Ray's right. This can go too far, and we have to be careful in how we use it, because it is not the same as a statute or an act of the commission. And the limited legitimacy that guidance has is something that needs to be paid attention to. Nevertheless, as a market participant, I found it helpful. And that's why I think that it can be appropriate to use in some cases.
So as part of a community reach effort, I know that you guys have a Fintech lab,
Yes.
innovation lab. I mean, I know your goal is trying to get the opinion from the Fintech companies, but if the companies come over, what would be the company what a company can get from meeting with the regulator, and then what we can get? So
this is a great example of an area where I think guidance has been super, super productive for both sides. So we have a team at the SEC. It's led by Val Zapanic, who's a tremendous. Anybody been in with Val on these issues yet? Carlo, right?
Yes.
So you talked to that team?
Yes, we've spoken to them about the legal entity identifier and in the digital world.
Terrific. How'd it go?
It went well.
So you know Val's previous background, by the way? She was once an engineer, and it shows in the sort of rigor that she. I mean, the rigorous way that she approaches hard problems like these. And I think to hear her, she briefs me about once a month. To hear her tell it, every single time one of you comes in, she learns something new. She has a new sort of set of problems that she's focused on. And she's trying to prioritize what we will give guidance on and when and how. You asked what those who come in get from it.
yeah.
Here's my pitch. You get a better SEC. Because conversations like the one we're having right now, or the ones that you have with Val, give us a sense for what the real concerns are in the market. And I gotta tell you, just so you know, in my job, it can be very, very hard to get an unbiased perspective from someone in the marketplace who says, Rob, we need to know what this rule, how this is gonna work, or we read Hinman's speech on what is a security, and we don't understand where we fall on that spectrum, or we think the speech is wrong, or we don't understand this footnote in it, and all those things. It is harder than you might think for me to get that perspective from the marketplace. When you come in and talk to Val, we get information about what the right rule looks like, and you help us do our job better. I'd like to think that'd be worth the trade. Now that said, I was on Wall Street and at a corporate law firm. Gotta be honest, when the phone rang and it's like, hi, it's the SEC, you know, I'm from the government, I'm here to help. Like, I was not excited. So I totally understand why the first reaction might be one of reticence, but like I said, I have the great good fortune of working with an extraordinary chair. We are I don't know to whatever degree we once were, we are in the business of hearing from the market about what the right thing to do is and taking that advice seriously. It's partly because, largely because of Jay's leadership. So my own view is that you feel comfortable that you can come in and tell us the truth and get a fair treatment on the other side. And I'd like to think that under Jay we've developed and maintained that reputation.
So what is your general, although I know that you do not want to make a law for ICO, but what is your general view for crypto, blockchain, the whole thing, the concept?
So it's a funny thing.
Where is
A lot of times I'll get asked, like, what do you think about crypto, blockchain? Discuss. So a few things. So first of all, I'm happy to share my lawyers aren't here. I should say these are only my views, not the commission's views, not the chairman's views, not my mother's views. These are just my views. Although I really hate that the lawyers make me give this caveat. I mean, it's been true about everything I've ever said. So I'm just going to add the obvious additional caveat that just given a little more time and wisdom, they're going to figure out I was right all along. You know, my own view is that there have been very few developments as exciting in the last 30 years in the marketplace as the evolution of blockchain technology and its application, not just to this space, but to all kinds of interesting areas. So I did IPOs in the 90s, so I was around for the tech boom, or bubble, depending on one's point of view. I was a corporate lawyer in the mid-2000s, so I was around for a lot of the CDO and RMBS type packaging that happened. They pale in comparison to the enormous value-creating potential of a lot of the technology we've been talking about today. That said, my strong sense, just as an observer, is that we are at the beginning, not the middle or end of that story. Just figuring out now the potential of the technology, the risks of abuse, the ways that it can be leveraged best. I have to tell you, just as a human, forgetting about it as a commissioner, when I first heard about the blockchain technology and learned about it wasn't obvious to me the very first or best application would be money. I thought it might be audit or other things that demand high quality verification at high speed, contracting. And just to be clear, those applications I'm sure will move ahead. But it wasn't obvious to me that the first place we would go would be ICOs or cryptocurrency or whatnot. My own view, whatever you think of everything I just said, doesn't really matter. Because I am not, as a commissioner, in the business of judging the technology or an asset class. It's not my job. My job is to make sure that American investors who are in those products understand what they are getting and are being treated in a fashion consistent with the securities laws that we have. That's it. That's it. And I take the limits of that role extremely seriously. So a lot of people like to ask me, hey, what do you think of, and they ask me for stock tips too. And I'm like, first of all, if you got investment advice from me, it'd be worth what you paid for it. My father would be happy to tell you that. And second of all, it really doesn't and shouldn't matter, because I don't make those decisions. I make sure you understand what you get when you trade that stock, when you make that investment, when you buy that security. After that, I'm out of it. I'm out of that business. Now, just to be clear, in the ICO space in particular, I think we had a very significant period where that product was being used in a way that wasn't consistent with the law. Of all the many things that I'm proud to have worked with Jay Clayton on, I am most proud of what the team did to get out ahead of the ICO issue, to be clear that we were going to be forceful about the limits of the law. I think that was difficult as a matter of leadership for Jay to do it. I think it was the right thing to do. I think the team that he put in place did it just right, and I'm very proud of it. Now that we've gotten past that part, people are asking the very logical next set of questions, which is, okay, now I know what not to do. Help me understand how to do this right. And we're working on it. Hinman gave his speech. Val is meeting with people 5 days a week. We're really working on moving that conversation forward. So I am very, very interested in the next 5, 10, 15 years for blockchain. But I'm quite convinced that what I think of it will neither be here nor there, because the market will help us decide what the long-run value is of that technology. And the job of the SEC will be to make sure that investors get treated right when they're involved.
We have one last question here, and then I know Commissioner, you'll stick around for a little bit.
Yeah, of course, happy to take questions. Bring it on.
Excellent, thank you.
Thank you. To build on Avery's point, it seems like the ethos of blockchain and cryptocurrency is about decentralization, empowering the user, and all those things, whereas securities laws built on devices, right? And so it's about investor protection. And so it seems like it is obviously those things are in conflict. And so have you all given any thought about maybe reconsidering direct recommendations to Congress about where to redraw the line, accreditation lines, crowdfunding, all these things that are really in conflict with the ethos of blockchain? It seems like it may start with you all to think about where do you draw investor protection with investor independence in this whole thing about blockchain?
It's a very good point. What's your name, sir?
Desmond.
Desmond. So Desmond's point is, look, Rob, there's some degree to which the ethos of blockchain can be summarized in a sort of decentralized, a pursuit of individualized, I mean, Desmond, you didn't put it this way, but I'm just going to steal a word, freedom, right? And Desmond's observing, not incorrectly, that the SEC, in a way, is a centralized body designed to protect people from those who might hurt them. And Desmond's wondering, where's the line between these two things? It's a great question. I'm sure I don't know the answer tonight. But I just want to observe one quick thing for you. It seems like a tension, but if we back up and we're really honest with ourselves, it's not. And here's why. To be free in a decentralized fashion requires a basic backdrop of social and legal understandings against which that freedom can exist. There is nothing inconsistent, in my humble view, with having freedom and a fire department, or freedom and a police force. Indeed, I would say, having freedom and courts are coexisting and conditional on one another. That the existence of that infrastructure is gives people the confidence, ability to trade with each other freely. Because they know that if someone treats them unfairly, and someday someone might, there will be an answer. And indeed they know that the existence of that system will cause this person today to treat them more fairly. Because they know in advance that they'll be punished if they don't. Now, all that said, this dichotomy is a bit false, but you're not wrong to say in a world where we have verification technology like we've never had before, individuals have the power and information to protect themselves in a way they never had before. Is the balance today still the balance that we struck in 1934 when my building was created? And I'm not sure that it is. I'm not at all sure that it is. And I think it might be time to revisit that balance. But here I come back to your colleague's point and say that that balance is struck properly by the Congress of the United States. What I have at the moment is the 34 Act and everything that followed. That's the limit of my legal power. And so readjusting that balance might take consideration by the elected representatives of the people, where I would think that that balance might be more properly struck. In the meantime, my job is to use the legal tools that we have to make sure people have the freedom to deal with each other, fully consistent with the ethos you're describing, but in a way that reflects the law. Like I said, so far I feel like the SEC, I know not everyone's happy with our performance on this front, and it's maybe not the popular thing to say in the room in the moment. I am really proud of what Jay Clayton and his team, our team, have done on this stuff. I was so proud that they were ahead of the ICO issues. I think Bill Hinman's doing an admirable job to try and draw some very difficult lines. But I'm very open to hearing from all of you about how we can and should do better. Do you mind, can I take one more?
Take one more.
Is that all right?
This is your table right here. You know, I mean, remember what he said. He's like, don't say much, but that's me. I'm different.
I'll borrow his, and I'll put it to you this way. My guidance is that you allow me to take another question.
I will accept the guidance.
That's what you meant, right? So one more, please. What's on your mind? Just to be clear, one reason I was so excited to come here tonight, when I was in your shoes and a guy like me would come talk, I didn't like that I didn't get the chance to talk to my governor. I really thought, these guys are making things, kind of harder for my clients or easier. I just like to be able to look them in the eye. So that's what I came for. So talk to me. What's on your mind? Yeah.
I'm a VC building a new fund. And
Congratulations.
Thank you. I have 25 years on the other side of the equation as an entrepreneur. And coming from that perspective, one of the reasons I'm building this fund is to invest in supply chain and digitization of a refashioned global supply chain. There is so much misalignment currently in incentivization structures of the asset class of venture capital, and people are getting all, in their head about, is it a bubble, and is there a better way to invest? You have massive shifts globally of different fund of funds looking to invest in, earlier and earlier, and private equity now starting to dabble in early stage. Is there a new asset class that you see emerging that will create better alignment of interests and focus on profitability rather than these quick flips?
Great question. Sorry, what's your name?
Lisa?
Lisa. So I'm going to summarize what you just said a little bit, because I want to make sure I get it right. You're making an observation I think is very important, which is that at the moment private capital markets are, would it be fair to say they're a little frothy? And I have to tell you, of all the things that have changed since I was on Wall Street to the time I got to the SEC, this is the most remarkable. This is the most remarkable. I have to tell you, when I was an investment banker, if you wanted to raise $300, $400, $500 million, there was one way to do that. You got to ring the bell on the New York Stock Exchange. To raise that kind of scale, you really had to go public. Because, first of all, because of some legal limits on the scope of funds, et cetera, but also because it was just a lot of money to put together. Now, you can make a wrong turn in California and pick up like $75 million. I don't even know if you need a deck. It's unbelievable. And I'm not criticizing. I'm not saying the bubble, whatever. I'm just saying it's a fascinating development in our capital markets that deserves our attention. And I have to say, I think there are those among us who are worried about something else that this leads to, and it's worth thinking about, which is ordinary mom and pop investors who pick a target date retirement fund and sit in it for 30 years, which is generally the advice that we have. I don't say we, the SEC doesn't give investment advice, but that sort of economic wisdom has given. Be diversified, be in a public company index. One troubling thing is that ordinary investors will miss out on a lot of the exciting growth in our economy to the degree that our private markets continue to dominate our public ones, especially to the degree that private companies get very large, touch millions of lives in this country in a way that they couldn't when I was a banker, and still not be public and accessible to public investors. Your question is, will an institution emerge that can, in a disciplined fashion, go through these private investment opportunities and separate the wheat from the chaff in a more systematic, thoughtful way? I certainly hope so. And I suspect that because of the market forces and because people are looking for that kind of discipline, eventually the market will bring us to that place. We'll favor those institutions that did that hard work. Now, you might be wondering, when?
Well, I know of one.
What's that?
I know of one.
I'm sure.
Jonathan Nelson worked at the SEC on building out crowdfunding and the standards behind what you came to. He's now launching a fund on the London Stock Exchange that's basically a mutual fund of startups, focusing on investing in profitable companies. So a nurse can put in $20 a month, and strategics can put in millions in the same asset class and have quicker liquidity opportunities than if they invested in venture and have the same sort of growth.
So important. So I think the answer to your question is yes, there are a lot of institutions emerging like that. Some closed-end funds are moving into that space. BDCs have become more and more popular. If I'm being perfectly candid, I don't know that we've done all that we can to encourage the development of those institutions, and that's something I'm very open to. So I'm somebody, for example, I testified in front of Congress not that long ago about closed-end funds, which for a long time had become a disfavored investment vehicle, and they haven't been problem-free. On the other hand, they provide ordinary investors with the ability to invest in private opportunities. They have managers who do the disciplining, sorting function you're describing, and investors can know the deal before they get into those transactions in a way they might not otherwise. So I think we should be thinking hard about how to encourage more of those institutions to come
I
about.
would like to talk to you about that. The supply chain is a perfect opportunity to really bring a community together. We're all talking about collaboration all day today, and yet we're still investing in this old paradigm.
So here's my last pitch to all of you, for you and everybody else. If you have a thought, if I've said something tonight that you wonder about or worry about, or you'd just like to tell me more about what you're working on, be in touch. Here's my email address. And I promise you that after a talk like this, the best thing that can happen is I hear from 2 or 3 folks who say, you know, you said this thing, I don't think it's quite right, or have you heard about this market experience, and maybe think about it from this point of view. I promise you'll hear back from me, and I promise that I'll be grateful for your willingness to reach out. So if you have thoughts like those, please do follow up. One last ask. I lied a little there, I had to. Is the work of this group is so important. I know that everyone's busy, getting together is challenging, but for you to come together and talk about, first of all, to reward those people who are doing innovative, exciting things, to think hard about the future and what you want to tell your government about the best way to encourage development and growth. It's invaluable. It's absolutely invaluable to our work, which is why I wanted to be here tonight. So thank you so much for all your time and comments. Hopefully I'll hear from some of you by email, and I hope you enjoy the rest of the evening. Thank you again.